As JVC said, we have some guests registered again. Hopefully they will roll in. If not, either case, I'll start in another minute or two here. It's the top of the hour right now. And the recap can start a minute or two late. You can see I have up on my screen share. The far right is the session. There is currently UB at the low. We were just chatting about this. It's a crazy session. Hard to say anything else. But interestingly, there's a lot of interesting artifacts. These top views are the TPO views. I use these gray lines for single print areas and poor weak highs, poor / weak highs have the dotted purple. So there's lots of stuff you could trade toward. And meanwhile, it's been moving back in this range, pretty interesting. We leave UB at one end, we trade all the way to the other end. We did have a price rejector up at the first break of the, it is a double break day, just barely leaving a bunch of UB at the bottom. But this recap is more about what went on during the week than it is the day. I just kind of wanted to point out that this is a kind of a wild day, and there's been good opportunities just because once it gets moving one way or the other, it tends to keep going today. But you have to be really careful about where you choose to play. But take a look at this TPO view. I'm going to blow it up just for fun here because this caught my eye. If you've been to any of my recent sessions or at the Ides of Monday, I talked about this. We have this pattern over and over again where we have a news event, FOMC, NFP, one of the PIs, PPI, CPI, take your pick. And we go all the way and we take out the edge of the range, either direction. We've had it working both ways, although the last few have been to the upside. And then what happens is we trade right back into the range. And we can see that just recently happened in the last couple of weeks. But what's noteworthy to me now is that this was two very distinct ranges. There was one up here and one down here, and they merged together with this kind of old area. So it's kind of like we're finding value here. We haven't pulled back a whole lot. And, the bulls are still arguing that the bear market low is in and we're going to have a bull, or rally, and, inflation is not going to get worse and the Fed's not, all that crap, whatever. I don't really care what the opinions are. I just kind of look at the price action. And I've been saying for a while that this had formed a really nice apex, which it had until last night. It broke it. If you just kind of, draw a line here down and draw one up here, the apex would have been right in there around, just 4130-ish, kind of yesterday's range. And then this was the overnight, and then this is regular trading today. We are right at the low. The last low held and we bounced. But remember, this is just a retrace of these news announcements. We're right back in the old range. So these two ranges, the one, that the news created and the one before it, are merging together. And that's always interesting when that happens. We've seen a few other cases of that. There was one down here. This, if you look at the very end of December and go backwards to what, I don't have this TPO view scaled that far back, but you'll see this was a consolidation of a previous range also. And so it's just a very interesting spot. I'm not predicting it's going to go up or down, but the point is it's got a lot of room to run either way. That's my key point about this. The single print areas below us, just 4,000 below us is, big fat giant whole number. It's held before. There's a single print or two down there. So, just really likely we're going to see this range continue to expand in one way or the other or both. And I think that's really good trading environment. But if you're trying to, trend trade this, you're going to end up in trouble a lot. It's definitely about the ranges and, have we gone far enough and how much momentum do we have at any given moment. So that's kind of my view of what's going on. I do want to show you guys a couple of other things. We've looked at this next view for 2 months now, and it's been the same thing. Actually, it goes back farther than that. It goes back to almost, end of October, so early November. So it's a lot more than 2 months. And basically, these are dailies, and I've just drew fibs from the high to the low. And we're still in the ambush zone. And YM is still the most stable pattern. We saw that on the TPOs as well. It has varied the least. NQ has bounced the least, along with RTY. So they could both bounce a lot more and still be in the ambush zone. But ES has been right on it for a while now. And so, this is really a clear indication that the market could move dramatically. But right now, this range, the extremes of it have been interesting. And I was telling people that were here earlier, I was actually trading long all morning. On the ledge breaks to the downside of NQ, I was buying those and playing them back into the range. And, when we're at the extremes of the range, that works really well because you get a lot of sudden movement. But you just have to be, careful scaling those things because the range could disappear. And, we still have UB down there at the lows in ES and in crunched NQ. So, the bottom could fall out at any time. And it's a massive air pocket, at least down to 4,000. That's the first place it even starts to get interesting, which is, there's a single print between 4,020, so 10-ish, again. So that whole area gets interesting if the bottom falls out here, which it hasn't done yet. But I call your attention to one other thing just today-wise, because this has been going on for a few days as well. The internals just cannot get out of the gutter. We open weak, we try to get up to just, zero, advanced decline, net zero, and we can't. And that's happened a few days in a row. And, if you look at the heat map, tech just can't rally. Yesterday was really bad. Today's a few things are rallying, but not in tech. It's the stuff that's rallying is like Johnson & Johnson and United Healthcare and Procter & Gamble. This is all consumer stuff. And more stable stuff. Tech is still getting beat up, and that's the whole conversation about interest rates and is the Fed done yet? And it will continue to be a market that's driven by people's opinions of that. And again, the only really serious mistakes you can make here are having too strong an opinion about what it's going to do next. If you just kind of go with it. We had a couple of really interesting, fun moves. In fact, let me just bring this over here so I don't have to share the other screen. This is my 5-second view with a regression on it. And, look at these extremes. They were, again, if you just looked at nothing else and just said, well, if we get to an extreme and it turns and, the delta flips over and starts going the other way, it's low risk to join it. And this has played out a bunch of times and really violently. And, that's very tradable for a scalper. But when we're kind of in the middle deciding what we want to do next, it's possible to be, really offsides and wrong. And so I'm just, I'm finding like, trading the open has been a little tricky. But and again, I'm summarizing the week here, but once we get a move going and we either take out a ledge or take it out and start to head back into the range, those are really good conditions to join and fade. We've seen that just over and over again. So I don't suspect that's going to change a lot. Remember, we have a quad witch coming up in March, and obviously rollover before that and big expirations before that. So the potential for volatility to continue to get crazy is there. And also, I posted this on social media in a few places. The book is really thin, volume is low still, and so the volume comes in sudden bursts. But overall, the total volume is low, and that is also creating this environment with these sudden radical moves from one point to another and leaving lots of artifacts. Ultimately, I think it's going to clean up, but you could easily argue that the market's in a giant range of price discovery now, particularly looking at those TPO views. It's really clear that these range extremes get formed every time we get one of these news announcements that the market thinks is favorable, FOMC meeting or NFP numbers or whatever, CPI, PPI. And then we kind of trade back into the range, and we're in that trade back into the range phase right now. And there's definitely been a bid under the market at certain spots, but it just feels like overall it feels weak to me for now, but I'm trying to keep that out of my head and not be biased. But I'd love to come down and see how we do at 4,000. That would be another really interesting spot to trade. Anyway, so that's kind of my weekly recap, just kind of thoughts from the tar pit here. I'm having a decent week, but I'm trading really light and small, and I'm copying. So, $20 in a bunch of accounts adds up, and I'm also in the process still of working on moving and a few other things. So I'm keeping it relatively low key here in my trading world. But I have had something strike a few times this week. It's actually struck a lot in the last year or so, and that's going to be my Dino topic today. And that's the how much damage boredom can do. Now, I want to be really clear what I'm talking about here, because I find, and again, most of you know my story. I know we have some guests registered, but I wanted to just, recap my experience and how I developed these opinions. And how's the Lido competition going? Yeah, that was interesting, because that was one of the things that I was trying to alleviate some boredom with by trading in that. And I actually was aggressive for the first couple of days, and I was in the top 20. And then some stuff came up in the homestead here that I had to deal with around my move, and I had to just kind of walk away for 2 days. And so I kind of, in a contest like that, you have to be either really lucky with a YOLO trade, or you have to be just really consistent every day. And I was doing well. I was like 3,000 the first day, and the top guy had 4,500, I think. But anyway, that's a really good question relevant to today, because that's an example of things I try to do to alleviate boredom. But let me just introduce this topic a little bit more. So, as you guys know, I've been trading 50 years in a couple of weeks, and I've traded futures actively since the early 90s, and I've mentored and coached people trading futures since the early 2000s. And I want to be really clear about what I mean when I talk about boredom, because a lot of people don't understand what I mean when I say this. So let's be really clear. When I'm talking about boredom, what I'm talking about is a trader that has an edge. So consistently, and obviously this would affect traders that don't have all these pieces, but I'm talking about a specific type of boredom. So you might have pieces of this if you're not all the way there, and I'm not minimizing those, but I want to be really clear about the point I'm making. So here's let me go at it. So assuming you have an edge and you've been consistently profitable, for some period of time, not a week and not a month, but, over some a year or more, you could say, yeah, I'm a consistently profitable trader, but I make mistakes now and then, but my equity curve is overall up. Okay, that's kind of what I'm talking about, a trader at that level. But pieces of being there will apply to everybody. So traders that are there, that are at that level, let me rephrase that. Most people that are successful traders over time are passionate about trading. They're not here to make money. I mean, making money is how you get compensated for being good at your passion of trading. There's very few people that come to trading looking to make money that last very long. There has to be something about the game that attracts you. Otherwise, you just won't be able to keep your intensity up. It's not possible. So anyway, that's my opinion on that based on that experience that I just mentioned. So assuming you're passionate about what you do and you're reasonably consistent most of the time, then the thing that will kill you the most frequently, you will learn over time, and I've seen this coaching people, I've seen it with myself and other people mentoring and coaching me, is when you're just in the day in and day out. We say this all the time in TRG, good trading is boring and boredom is dangerous. That's where I'm going today. So good trading is boring because if you're working your process, then it's not an emotional thing. You're just seeing setups, you're rating them, you're executing against them, and then you're going on to the next one. That's how you work a good process. And that's a really boring thing, particularly if you've been doing it for a while and you're relatively good at it. That's the paradox. The better you get as a trader, the more likely you are to be caught in this trap. And I learned this a while ago, and it was perplexing, but it's definitely true. So the better you get, the more likely this is to happen. And what is this? Well, this is you do something out of boredom just because you're bored. And trading a contest is a good way to deal with it because you can do whatever you want. I frequently buy evaluations that I have no intention of ever funding, particularly a 150. Occasionally I buy those, and just trading size, and not being terribly worried about the trailing drawdown, for example. And those are also dangerous. And so here's the point, okay? The reason that good, consistent trading is boring is because following a process by definition is boring. It has to be. If it's exciting, guess what? You're not following the process. There should be no elation when you win big. There should be no shame when you lose bad, or you shouldn't lose bad, but when you lose, that should just be part of your process. And so boredom rears its head. And what I tend to do is, right now I'm trading a big block of these $1,500 drawdowns, and to do those well, I have to keep my risk management really tight. And I do that really well most of the time, and I get bored doing that because it's not that much fun. And, I have a max size of 5 micro NQ when I do those little 1500s. That's plenty to make all the money you need. And so one of the things I've looked at, if a contest comes along that's interesting, by all means, that's something I can do separately. Trading a different, evaluation, or trading a different style. Let me kind of put these into boxes. People are really hard, people are not good at compartmentalization. If you're good at compartmentalization, it's because you've taught yourself to be good at it. But you have to do that if you're going to be a consistent, good trader. It's back to that you need a good general manager and a good trader, and most of us are both of those things, and those are two entirely different hats, and they're two different skill sets. And so here's how I've dealt with this boredom problem as a general manager before. I give myself permission to play. And by that, I mean, buy an evaluation, do a contest, go into a sim, or throw, $500 in a live account to test something, and, consider the money basically spent. And I consider that research and development and play time. But one of the dangers of doing that is you have to be careful how much of that you bring back to your process, because it can damage your process when you go and do that and you play around a little bit, and you're slinging 100 lots and it's working and you're making lots of money, and then you want to go back and trade your $1,500 drawdown. It's a totally different mentality. So it's important, I think, to give yourself permission to play, but I find that I have to make it really clear to my brain that it's something different, to compartmentalize it. Otherwise, I find that the two end up getting blended together. So for example, with the contest, what I was doing is I put it on a completely different computer at my desk, and I'd flip my monitor on and off to that computer when I was trading the contest. So it was really clear that over there I could play, but on my main setup, I had to stay focused on, what I'm really doing to make money. And that was really challenging. Got to tell you, that was challenging. One of the things that I used to say in the boot camps and in the workshop we did in 2019 was, you need to make this mechanical, make it mech, like you're playing a game. That's the trick to really making a process work. And the flip side of that is make your play mechanical. And this sounds kind of silly, but I found this really works well for me. If I have rules for play, and I can't just go out and do whatever I want, there has to be a specific objective to it. And for example, I want to practice big swarming. I'm not going to do that in my 25K, $1,500 drawdown accounts. You can't swarm more than 5 micros or so and expect to come out alive. It just, you get too far off sides. So, but I want to practice that. How can I do that? Well, for a while, I actually had funded accounts. I had 150K fundeds and 25K fundeds, and I was trading them completely separately that way. And I found that worked really good when I was focused, but the minute I was unfocused, I was screwed, because again, that blending thing would happen. The tactics of a big swarm, where I might swarm up to 100 micros at a ledge break, or going with it or fading it or both, that you can't think that way. You have to be so much more precise if you're trading a smaller account. So I found that if I make my play mechanical, just like I make my process for trading and making money mechanical, that really helps. And it's so critical to play. If you don't play, at least go in a sim every now and then and do something different and let yourself spread your wings a little bit. You'll go crazy with the boredom when you're trading well, and you'll have a big error. And this brings me to another thing that's part of this. So that's kind of overall boredom, which occurs in waves of weeks or days. But what about just during the day and during a session? If I'm sitting here and there's days I trade the whole session, how do you keep from getting bored and distracted there? And this is also really good. It helps to have a process. If the market is not giving me setups, but the potential for them is there, and I don't want to get up and walk away, and I don't want to necessarily use alerts because we've had these big moves today that are changing direction very suddenly. So this is the kind of day that I don't want to be too far away. I want to take advantage of those sudden extremes. And so again, I have a process for this. I give myself something else to do at my workstation. In this case, I'm watching a movie, so that I can watch the trade, but I don't have to be focused on it. I'm not watching the order flow. I'm not watching the footprint. I'm just looking at generally where's price and is it interesting at all in that spot. And most of the time on a day like this, it's not. So I'll do something else. I'll watch a movie. I'll answer email. With one eye on the other monitor that I'm watching this on, because when the opportunity comes, it comes fast and furious, and I want to be ready and just execute against it. And so if I wasn't doing that, what I used to find, and I still make this mistake sometimes, if I'm waiting too long in a set of market conditions where there's no setups, like right now, we're in the middle of the middle, it's not at any extremes, there's nothing I like right now. If I stare at that too much, I get bored staring at that, and I start seeing opportunities that don't really exist. I make them up. Or, so I overtrade. Or the alternative is that I get tired, and then when the opportunity does show up, I'm not ready for it. I'm lazy. I haven't been paying attention because I've been staring at it for too long. So these are all pieces of things you have to manage as a trader, and you and your general manager have to really figure out. And the point that I'm making here is that you have to figure out a deliberate way to avoid boredom. You can't just say, I'm not going to get bored. You will. And guess what? Good trading is boring. So, if you're in the zone and you're making good trades and they're profitable and you're executing, after a couple of consistent days of that, you're going to be bored to death. It's just the nature of it, and you have to figure out how to manage that. So, and at the same time, when you're not trading and you're waiting for an opportunity, you have to have a way to manage that boredom. And that's my example of watching a movie or doing something that doesn't require all of my brain, but keeps me entertained. Sometimes I listen to music. Sometimes I mess around on social media a little bit, particularly if there's something going on in the market and I'm waiting for something to happen, like there's news coming and I think that might create my extreme and I don't want to trade before the news, I'll see what all the fools are talking about on Twitter or something like that and entertain myself. Again, the theme here should be really clear to you that this is about keeping the part of your brain that wants to play, giving it that permission. You have to do that. I don't know anybody that can just shut that down. I know a lot of people that try and say, no, I'm going to stay focused. No, I'm going to work 8 solid hours. And, everybody starts out thinking that that'll work, and everybody abandons it pretty quickly. And now there's another way that people try to deal with this that I want to just comment on quickly. I do know a lot of traders that say, I'm only going to trade the first hour, or I only trade the open, or I only trade the close, or I only trade, Wednesdays at 11 o'clock, or whatever it is. And again, in theory, only trading like the open or the break of the initial balance, in theory, that makes a lot of sense. The problem when you have a volatile kind of bear / maybe not bear market like we have is that, the breaks can come late in the day. That there's a lot of really good setups that are occurring at random times. And in my experience, this is really typical in volatility. And so just trading a certain time of the day, I mean, if you have to because of your job or whatever, that's fine. But trying to restrict your opportunities to an arbitrary time of the day, I think that's a lot more difficult under volatile, range exploration conditions, because the opportunities are when the range is breaking, or when we're going outside in from the range being tested, and those don't just come always in the first hour, or at some certain time of day. They tend to come around news and around big trading events and geopolitical news bites. And so, but you also don't want to sit at your computer all the time. So for those kinds of things, if I'm not here doing something else, one way that I find to alleviate boredom and still be productive as a trader, because this is, what I do, is using alerts. And, I use them in Thinkorswim because they're easy to set up to my phone. And that's really useful, because then I can be, elsewhere and still, get back to my computer in a couple of minutes at the worst case. I could maybe out with the dogs, or, I can even go to the grocery store and, the alarm goes off. All right, well, it at least tells me something's happening that I wanted to know when it happened. And I find that's another way to control boredom and get away from my workstation. And oftentimes I literally just go in the other room and I'll sit by the fire, or I'll go on the deck and watch the ocean, or I'll watch TV, and, I'll get an alert and I can be at my desk in 20 seconds, and catch that break. So I find that's a really useful way to not, be staring at my computer all day and still be able to capitalize. As a scalper, the opportunities come suddenly sometimes. And so, being in a position to take advantage, I think is important. Anyway, so let's see. Let me look at the comments. And by all means, if you have any comments or anything you want to add, put it in the chat, or any questions. Let's see. So, yeah, need passion to maintain resilience. That's a really good way to put it, Sebastian. And that's totally true. If you're not passionate about this business will just beat you up. You're better off doing something else. But, for me, somebody asked me, I get asked a lot, why am I passionate about it? What is the attraction? For me, it's the ultimate meritocracy. I have that on my Twitter profile. And it's just, this is such a game of, it doesn't matter how much school you have. It doesn't matter where you grew up. It doesn't matter whether you were poor or rich. It doesn't matter how many languages you speak. It doesn't matter how good you are in math. This is a total meritocracy. You are as good as you make yourself in trading, and everybody can get better. There's infinite ways to improve your results. And they all come from improving your process. And the minute you internalize that thing right there, that you're not trading for results, you're trading to improve your process, and that will improve your results. It's not about the results. It's about profits come from process. One of my mentors drilled that in my head for decades. Profits come from process, not the other way around. Your profits don't lead to a process that works. Too many people are focused on their profitability and not, are they doing something that statistically will lead them to being profitable? And that's boring. That's the point. So anyway, once you understand that, I think this makes a lot more sense, and you find outlets. And yeah, passion's critical. But if you don't have outlets for that, you can really get to the point where you want to blow your head off periodically. I mean, this is a tough business to keep your head in the long term. It really is. And that's why I say play is so important. I love the whole game. So every now and then I have to go play the game a different way than I routinely play it. That's how I entertain myself. It's kind of like, every now and then one of the top Formula One guys will go, drive NASCAR, or they'll do, 24 hours Le Mans, or, those kinds of things or Dakar, the rallies, it's still in your wheelhouse of your skill, but it allows you to play a little bit differently. If you're a scalper, do some structural trades or do some swing trades. That's another way I used to, and I still do that with the ETFs. That's also a way to play a little bit. The beauty of trading the leveraged ETFs is you get almost as much leverage as some of the futures, but it's easier to manage risk because someone else is trading the leverage for you. The fund manager is responsible for 3 times the the QQQ or 3 times the S&P. You know, that's his job, not yours, to figure out what the futures. So you know, that's another way you can kind of play a little bit with some of your proceeds from all the money you make trading futures. But it's really important. That's a really good point about passion. Yeah, winning against yourself to succeed. Well, that's what I mean when I say it's the ultimate meritocracy, because I don't measure against anybody but me. I don't care who's made more money last year. I don't care who's going to win the contest at Lilu. It was fun to, you know, to know that the first couple of days I was right in there, and I could definitely have been competitive, and that's cool. You know, was it worth keeping it up with the distractions for $2,500 top prize? No. By the way, one of the things I noticed right away is there weren't like one guy in all top 10 places. There was all top places were different people, and that was also very encouraging. And if you recall last weekend when I was talking about the contest, and on Monday I did bring that up, that I wanted to see what it looked like Monday and Tuesday, if it looked like it was sane, and it looks relatively sane. That may have changed. I haven't looked at it yesterday, but it's in the Lilu app if you're looking for where the leaderboard is there. Anyway, okay, thank you, Sebastian. Absolutely. Okay, I don't see any other comments in the chat. That's my Dino. I try to keep these real tight to a half an hour between the recap and the Dino wisdom. But, you know, when I do these, I try to think about and talk about the things that are more obscure. Like, you know, if you go to new traders and you say, you know, boredom is going to be your worst enemy, they have no idea what you're talking about. Trading's exciting. You know, it's fun. And yeah, it shouldn't be, though. You're doing it wrong. And that's a really hard thing to learn. And then the first time you're really bored and you've been making a lot of money over and over for a period of months or years, that's when, and I've said this in TRG a lot, that's when it's really, really dangerous. That's when you're at risk of having a massive loser, because it's getting boring and you're not focused, you're losing your edge. And if I have to look at, and I'll leave the session with this, if I have to look at my biggest losers, they almost always occur after a long, long string of winners. And I got lulled into a sense of complacency. I stopped being rigid about my process, and boom, I got spanked. You know, happens over and over again. And you know, you can't stop it from happening, but you can understand it and you can minimize the damage. That's what you have to do. All right. Let's see. JBC, Lee, anything you guys would like to add? Any comments or whatnot?
No, I don't have anything else to pile on top of that.
Cool. All right. And Lee says no as well. All right, cool. All right, everybody. So last session of the week will be my gaming the close session. That is likely to open early today because we're all over the place, and I'm hoping we get to a real good extreme around the close. So even if we don't, I think it could be fun trading the close today. So I probably will open up early, but I certainly will open up by the scheduled time. So join me for that. And if not, have a good weekend, everybody, and we'll see you. Don't forget, I should mention this too. Monday's a holiday.
Yep.
Yeah, Monday's a holiday. We are going to do the Sunday reopen as scheduled on Sunday, because there will be a Sunday reopen. It's a short session on Monday, and I actually like these little short sessions. They're quite profitable for me. So the Ides of Monday will be on Tuesday. With the same link. If you're booked into it, just use the link that's there for the Monday session. We're not going to move it on the calendar, but it will be Tuesday at the same time. But the Sunday reopen we will do as scheduled on Sunday. So two minor notes about the early next week schedule. All right. And with that, we'll leave it there. Thank you, guys. When is the overnight schedule in the future? I had hoped to do some of it around the contest, but my personal stuff is just getting too busy now. So I'm shooting for right after I move, because we have a rollover then. So that's the middle of March, the March rollover, and then the quad witching. I was thinking it might be fun to do an overnight class around witching, and if I get myself moved and set up fast enough, look for a surprise announcement around that. I have that on my calendar to try to do, but I haven't. I'm not going to make it official till I know I can do it, because I don't know what I'm dealing with up there as far as connectivity and whatnot. So anyway, thank you, everybody. I appreciate the kind words, and we will see you at the closing or events following over the weekend. Have a good one.